I was talking about the structure within price and looking at ranges, like specifically just ranges, not focusing on this little like small ass movements in price and like focusing on like, oh no, it just went down 20 cents, I might lose, or it just went down 5 pips, and you're freaking 100 pips in profit, and you're like, oh, it might stop me out, uh, you know, and just like really being able to just like decentralize yourself from the actual trading itself once you put the trade on, right? And just pretty much being like a back testing session within the whole thing. For instance, you know how like you do really good within back testing. The same is applied to trading when you have the right strategy. All these concepts are taken off ICT. I've back tested them probably anywhere from hundreds of hours. Uh, the least to say. Uh, and so ranges, right? So for instance, like you look for strong highs and strong lows to be broken to then classify a break of structure, right? A significant break of structure, and then price then to have a retracement, right? And to then be able to push higher, right? So for instance, like look at it right here, right? You have the break of structure above this high, look at it right here, right? Which caused a lower low. So this would be a strong high, right? So if this is strong high, you get the break of structure, look at it right there, right? Price keeps pushing up, right? You always look for price to push back to the anywhere from the 62 to 79 percentage level or Fib retracement level. And you take it from low to high. Look at over here, right? So what caused the extension to the bullish side and it to hit right here, right? So you see that like, okay, right? So why wouldn't you take it off this low, right? Why wouldn't you take it off this low and push all the way there, right? We wouldn't take it off that low because look at it right here. We have a lot of liquidity being grabbed, right? And then we really don't have that much reaction, right? So it shows us that smart money is still within price movement, right? And if it gets pushed below this point, look at it right here. They're just engineering their liquidity to then push higher, right? So why that makes sense is because if they push it down pretty good, right, and then it kind of like hovers around that pricing action for a little bit, it's because they're engineering. I call it buy side liquidity, but ICT calls it sell side liquidity. We're just gonna stick to buy side liquidity. So it's buy side liquidity because buyers want to get in at that price, right? So if buyers want to get in at that price is going to be pushed back down to there for buyers then to get in, right? Once it gets pushed below that price point right there, we're most likely, high probability, right? Think of probabilities. That will definitely help in your back testing and everything. High probability that price then gets pushed to the bull side because look at it right there. We had the balancing of price action, but it was engineering liquidity, if that makes sense, right? So we had a big push down and then price then just hovered around that point, consolidating, engineering liquidity. Consolidation is engineering liquidity, right? And then we had the pushing up, right? So now when I mean consolidating is engineering liquidity, I mean that consolidation has to then have some effect on price, right? We can't just have consolidation and no break of structure, right? We can't just have a consolidating factor and then to fill imbalance, right? And then get the push down and think that price is going to break below that consolidation and then push back up. It's not going to happen, right? So you always have to think of things in probabilities and understanding price from the origin of price move, right? For instance, like when we're collecting data and we put it in on a graph, we don't start from the middle of the graph. Even if it goes to the origin of price, right? We always trace back to the origin of price, which is 0, 0 through the bottom of the graph. And same thing with a chart. We do the same thing. We identify pricing action from the low of the range, right? All the way up to the high of the range before then we got that break of structure, right? And being patient within price action is just like, you have to, right? If you're not being patient within price action, you're not doing it right? So be patient. Don't have a timeline on but when you're going to be successful, and I think that's like definitely led to me identifying concepts very quickly because I didn't have a timeline of when I wanted to be successful. I saw all the other people being like, oh, it took me 2 years, 3 years, blah blah blah, and I'm like, bro, how did it take that long? And I'm like, I'm gonna find a strategy, right? So I identified what my problem was, right? Or what the potential problem was. And the potential problem was it's going to take me 2 or 3 years to learn how to trade, right? And it's taken me, it only took me like 3 or 4 months to actually identify pricing concepts and being able to back test and knowing where price is going to go. And not hindsight back testing, actually back testing and actually like forecasting price, not paper trading, because I just don't like paper trading. You don't really have any emotional attachment to paper trading. I find more emotional attachment to back testing and being able to set up like a pricing area where I believe price is going to go to, right? And then like going to bed and seeing if it did that overnight and identifying pricing target and stop loss and see if my stop loss get hit. So don't experiment, right? Experiment with what I'm telling you, but don't go and be like, this is the only way to do it, right? For example, like I thought that the you needed good sleep or else you were going to have bad performance, right? And it's all based on what the person needs, right? It's not based on what they really want, right? If you want to be good at this strategy, if it doesn't work out, then manipulate it and coerce it to your own liking and to your own satisfaction. So, and I think that's very inevitable. Uh, you know, it's very primitive that you do that, because if you just follow somebody's strategy that they're telling you, that's their mindset. If you're not the same as them, you're not going to have the same results, right? Same input, same, right? You aren't the same input, right? So think of the person as the input. You are not the same input, right? So then what do I do to identify a entry point, right? So what I do to identify an entry point is I go and I look where liquidity was being pushed. Wick rejections to the bearish side with red candles push liquidity down. Wick rejections to the bullish side with red candles grab liquidity, and then it gets pushed down, right? Because we have the opening up high. So it gets pushed up, grabs liquidity, and then it pushes down, right? And that identification of that then will help you in your analysis of price action, because then you can identify where liquidity is still resting. For instance, look right here, we have liquidity. Look at over here, right? Price gets pushed up. We have red wick rejection, so opens right here, pushed up, grab liquidity. We had it pushed all the way back down. Look at over here, right? So it pushed back down. Green candles with a wick rejection down to the bearish side, grab liquidity, and it gets pushed up, and a wick rejection to the bullish side with a green candle pushes the liquidity up. These are very, very fundamental concepts and understandings that I found at an early stage within my trading, probably about 2 months through going through ITT 2022 mentorship. Episode 6 is where it's at. He teaches the painting wall concept, and that is like what, like I was like, oh wow. And just thinking about the wall, and like if you're painting, the majority of the paint is going to be able to be applied to where you're starting out, right? So we have liquidity get pushed down, right down through here, right? And we have big candles, look at over here, right? And so liquidity would be below the wick rejection to the bearish side, with below the wick rejection with the green candle to the bearish side, because that candle grabbed liquidity, right? So it's below that area. Look at it right there, right? And then we're like, okay, where then do we identify that liquidity then would be, right? So for instance, look at over here, this red wick rejection would push liquidity down, right? So it pushes it down. Where does it push it back down into? It pushes it back down into this green wick rejection. Look at over here. So a green wick rejection down to the bearish side would be grabbing liquidity, right? So it's an open wall, right? There's nothing in the way of there, right? It's already a primed wall. And wick rejections with the wick rejections to when moving in a bearish structure, wick rejections to the bearish side with green candles are primer. Wick rejections to the bullish side with red candles are also primer when pushing bearish and within bearish structure before we get the break above the structural high, which is the strong high. And a strong high is what caused a movement that was in predicament to a bearish structure, meaning that it caused a lower low. So a high that caused a lower low is a strong high, right? It's a high that is protected, right? So it's a protected high. You can also call it a protected high, a strong high, whatever you want. To then push below weak lows in the efforts to grab buy side liquidity. And with taking that, you then understand that, okay, if we have a wick rejection to the bearish side with a green candle, that would be primer. When primer is then applied, right, it's a primed wall. So when you have a primed wall, you only need one coat of paint, right? So you only need one swiping of paint down to the bearish side. Now, these wick rejections to the bearish side, right, within moving bearish structure with a red candle are going to be paint, right? So it paints the wall, right? And if a painted and primed wall is then applied, there is a low probability that price will push through that only with all the concepts applied previous. Now that's with bear structure. If we're talking about bullish structure, and also like for instance, like anything that is not primer, right? So all the wick rejections that I said that are not primer, right? So bear structure, wick rejection to the bullish side with the red candle is primer, wick rejection to the bearish side with a green candle is also primer, a wick rejection to now those are primers, right? They're pretty strong, right? Now paint is going to be anything else, right? So it's going to be candle bodies and it's going to be wick rejections to the bearish side with red candles and wick rejections to the bullish side with green candles, right? And it's either green paint or red paint, and it's all in respects to whatever candle you have, right? Now when pushing now that's all bearish, right? When pushing bullish, switch your mindset. It's the opposite. So wick rejections to the bearish side, this is when price is moving, making higher highs and higher lows. Watch this video over and over because you'll start to understand it, right? Go in your charts and just watch this video over and over and start to understand it because it's a very powerful concept and you might be underestimating it right now because you're just scrolling through YouTube. But this is a very powerful concept when you understand it. And understanding takes time. Or understanding doesn't even take time. It just takes, I would say, a person that's self-aware of what is going on, right? It takes a person that's self-aware of what is going on to understand something. It doesn't take time. It doesn't take jack shit of time to understand something and apply it. So, and then when moving bullish, everything switched. So wick rejections to the bullish side with the green candles is our primer. Wick rejections to the bearish side with red candles are primer, right? Red primer. And then wick rejections to the bullish side with red candles are paint, red paint, including the body, but the lower wick is primer, right? It's that red candle. And then wick rejections to the bearish side with green candles are paint, including the whole bullish that bullish candle as well, right? So think of it as like, okay, right? So if you're starting right here, right? So we'll go to that bullish example, right? If you're starting right here, and you have to find, like, you can't just be like, oh, this is the candle located right here, and he said this is primer located right here, right? But you have imbalance located right here that has to be filled. If you have imbalance located right here that has to be filled, and then you have lows located right here that have liquidity located below them, it's going to grab that liquidity, and then it's going to push higher. It's not going to be like, oh yeah, this wick rejection located over here is pretty good. No, you have to understand that all these concepts have to be applied together to understand price. And you'll start to find that as you go through the chart, right? So wick rejection, right? So price started right here, right? price started right here. So it pushed down, right? So it painted a huge amount of paint, right? And then it pushed up, painted. As paint got weaker and weaker, it then applied primer, and then pushed down, right? And understanding that, okay, it pushed up, primer, right? Primer gets applied towards the top end of the candle. So understanding that, understanding also that, remember, you need a break of structure then to look for a point of entry, and that is either a protected high or protected low, if you want to call it that, or a strong high and a strong low. That's all I have for you guys today. Be much appreciated if you would hit the like button, because I just gave you something that nobody else is giving you. I 100% will guarantee that. And like, lots of people say that shit, but then they'd be like, they're not even fucking traders, right? So understand that. So I backtested this hundreds of hours. They haven't done jack shit. But prove me wrong. Go on the charts and prove me wrong, right? Put in hundreds of hours and prove me that this strategy is wrong. Please. Like, I would love it. And remember Fibonacci also. I recommend watching this video at least 2